If you're self-employed in Florida and you have tried to get a mortgage, you've probably run into the same wall. The bank looks at your tax returns, sees how low your income is because of your write-offs, and tells you that you don't qualify. And you walk away thinking the mortgage market just does not work for people like you. That's not true. You talked to the wrong lender. Today, I'm breaking down every mortgage option available to self-employed borrowers in Florida right now. From traditional paths that actually work in some cases to non-QM programs that most banks have never even heard of. Why banks make it hard? Let me explain. The real problem first, because understanding it changes everything. Their traditional mortgage system was built around W-2 income. Show up with a pay stub, a tax return, and a clean income line and employment verification? Done. Self-employed borrowers are different. You control your write-offs. You have a business structure, and what you report to the IRS after deductions is often a fraction of what you actually earn. So when a conventional lender uses your adjusted gross income to calculate your qualifying income, they're just using the lowest possible version of your actual earnings. The tax strategy that saves you thousands every April is the same thing that limits your mortgage options at a traditional bank. The traditional path and when it works is the conventional path. It's not always a dead end. If you've been self-employed for at least 2 years, your income is growing year over year, and your net income after write-off still supports the loan, a conventional or FHA mortgage may be possible. You will need 2 years of personal and business bank statements, a year-to-date profit and loss, and bank statements. The lender will average your income over 2 years. If your net income supports the payment, great. If your write-offs are aggressive, which they probably should be, this path is going to be frustrating. That's where non-QM programs come in. The bank statement loan is one of the most widely used solutions for self-employed borrowers in Florida right now. Instead of qualifying based on tax return income, you show 12 or 24 months of bank statements. The lender calculates your average monthly deposits, applies an expense ratio, and uses that as your qualifying income. No tax returns, no W-2s, and no employment verification. So say your business account shows an average of $20,000 in monthly deposits. The lender applies a 50% expense ratio, leaving $10,000 a month as qualifying income. On a personal account, most programs count 100% of your deposits. Minimum credit score is typically 620 to 660. Down payments usually run between 10 and 20%, and loan amounts go up to $3 million on some programs. Now, if you're a 1099 contractor, maybe a real estate agent, an insurance agent, a consultant, a freelancer, there is a separate program for you. The 1099 loan uses your 1099 income from the past 1 or 2 years to calculate qualifying income without requiring a full tax return analysis. This is a cleaner path for borrowers whose income is well documented through the 1099 filings. Now, if you're also a real estate investor, the DSCR loan is a game changer. DSCR stands for Debt Service Coverage Ratio. These loans do not look at your personal income at all. The lender qualifies the property based on its rental income. If the rent covers the mortgage payment at a ratio of 1 or better, you qualify. No business returns, no personal income, no employment verification of any kind. For self-employed borrowers who want to build a rental portfolio without their tax write-offs getting in the way, this is one of the most direct paths available. Now, credit score is one of the first things that they look at across all programs. Most non-QM programs start at 620. Your options and rate improve meaningfully at 680 and above. Down payment, bank statement, and non-QM programs typically require 10 to 20%. Reserves matter. Most programs want 3 to 12 months of mortgage payments sitting in an account after closing. Income consistency, lenders want to see the stability and growth, not erratic deposits and big gaps. In 2 years of self-employment, most programs are going to require that. The mistake is going to a bank first. If you went to a big bank and you got turned down, that is not the full picture. Banks have a limited menu. They do not offer bank statement loans, 1099 programs. When they say no, they are saying no to their products, not to the entire mortgage market. A mortgage broker works with dozens of lenders across multiple categories, and that access is the core value of working with a broker instead of a retail bank. Florida has one of the highest concentrations of self-employed workers in the country. The non-QM market here is strong, and competition between lenders is healthy, and programs are available for qualified borrowers. We work with self-employed borrowers across Florida, Georgia, and South Carolina every week. This is one of our most common file types. We know how to position these loans and which programs work for which situations. Now, what do you do next? Download the free pre-approval checklist. The link is in the description. It walks you through exactly the documents that you want to start pulling together. Then book a consultation. We'll look at your income structure, your deposit history, and your credit profile and your goals. And we'll tell you exactly what programs are available and what you actually qualify for. No pressure, just straight answers. Subscribe if you want more content on non-QM lending, self-employed mortgage strategies, and Florida real estate finance. We'll see you in the next one.